Hello, this is Jordan. This video is being recorded on the evening of Sunday, March 5th, 2023. Thank you so much for joining me today. In this video, I'm going to provide a weekly update and a weekly outlook for gold and silver and the gold and silver stocks. So we had been anticipating for more than a week that gold and silver and precious metals as a whole were ready to rally. We got that rally last week. Gold was up 2%. Big moves in the miners, GDX and GDXJ up 6% on the week. So looking at gold, we can see gold came down to a low of 1810. And remember, there's very, very significant support around 1790 to 1800. That zone. There's multiple moving averages filling in there. There's Fibonacci levels. So over the next couple months, that is going to be a very key level, especially if after this rally, gold is able to stabilize and hold that level and form a base above it. That would be really bullish and a sign that maybe 3, 4, 5 months, gold is going to make that breakout move. But the here and now, I always get away from the next week, even though that's what I'm supposed to talk about in these. So looking at gold, it traded to a high of 1864 on the week. Closed, we can round up and say 1855. You can see the red arrow there. That's at 1875. So if we go back to last November and you look at last June, around that point, 1875 was resistance. So that's a significant level. And also we can see that when gold sold off in February, it had the big move down and it had first support at 1875, then it rallied. So 1875 is going to be a key level here. And, if we think that gold is going to have more legs to this rally, and I tend to think that's going to be the case, then we would look for gold to trade beyond 1875, and then 1900 would be the next resistance. 1890 to 1900. So 1890, what is that? That's about 2% higher than where we are. So I mean, not huge potential in my opinion, but those are the resistance levels that I think we're going to see gold test. At least, I mean, for me, I think at worst it's going to test 1875, then maybe 1890 to 1900. We'll have to see how the NFP is this week. I mean, I know Bank of America thinks it's not going to be great. So we'll see. I mean, if it's not that strong of a report, obviously that would be positive for gold because that report in February really began this, higher for longer, more Fed tightening. And even with all that said, I mean, we're talking about only, if you look at the terminal rate in the Fed funds, it's basically around the level of another 3 rate hikes. So this higher for longer, the Fed, I mean, if there's something that's really going to shake the gold market, it would be the Fed, the economy strengthens even more, and then the Fed thinks they can tighten to, 6.5% or something like that, which I don't think they'll be able to do in any case. But that's my point on that. So, gold moving out to the medium term, we're still kind of probably range bound. But so looking at silver, silver also had a good week. Not quite as strong as gold. I mean, maybe it was higher in percentage terms, but looking at the candles and the action, I just think it was stronger for gold. But anyway, we can see silver came down to 2050, had a good rally up to almost 2140, closed the week at 2124. 22, I mean, that's been a significant level for 2.5 years. So that is going to be a resistance level for silver. And so 22 is about 3+% above where we are now. So if we see gold hit 1890, 2%, silver should probably hit 22 in that scenario. If gold is able to reach 1900, maybe silver is able to, at that point, there's looking at the candles, there's, resistance around 23. So those are the levels that I would look at for silver. Now, turning to the stocks, I can be more definitive and clear here. Looking at GDX, the next lateral resistance is 30. We can see in December, the 30 was clear resistance. And if we look at February, that's the level that stopped GDX after the big initial sell-off, the couple days after the Fed. GDX held above 30 for a few days after that point. Then it rallied back to 30 mid-Feb, then it fell down. So based on that, I mean, I'm just giving you the play-by-play, but the visual shows it there. 30 is going to be resistance. So GDX closed at 28.63. So a move up to 30, you're looking at, what is that? That would be about 5% if GDX is able to reach up to 30. We'll probably also see some resistance at 29, because if you look back at the last 6-7 years, and especially the last couple of years, 29.30, I mean, that's been the key level for GDX. So for GDXJ, we can see, if it's 30 for GDX, it's going to be 38 for GDXJ. And then there's also resistance, call it 36.50. So those are the levels for GDX and GDXJ. SILJ, I would look at 10.5 as initial resistance. I mean, if the rebound has some more legs, maybe SILJ could reach 11, but that's looking at like an 8% move. So that's quite a lot to ask here in the very short term, unless, again, as I was saying earlier, the employment report, unless the economic data comes in and shows that the start to the year was a real aberration, then we're not going to see, in my opinion, this rebound being too sustainable. Okay, so there you have it. We are in a short-term oversold bounce, and I think it has a little bit more upside at least, and we'll see an FP report at the end of this week. If it's bad or not that great, and that could, depending on how miners trade before that, that could give this sector a little bit more upside during this rebound. Thank you for tuning in. Hope you had a good weekend, and I'll talk to you guys again this week.